Hi, everybody. I am Cynthia Murphy, investment strategist at Verify, and welcome to ETF Spotlight. I'm very excited for today's episode. I'm joined by John Davi, who's founder, CEO, and CIO of Astoria Portfolio Advisors, which is a lead asset managed firm that also has ETFs in the market. I think 5 or 6 ETFs now. It's a firm that has been growing a lot, and I'm really excited because I've known John, who's joining me today for a long time, John Davi. Welcome to the show, John.
Thank you, Cynthia. Thrilled to be talking to you.
Let's catch up on what's been going on in the world. But before we do that, maybe set the stage by telling us a little bit about Astoria, what sets it apart. If you think about investment philosophy, how you guys approach investing and asset management, how would you explain that to the audience?
Sure. So we view ourselves as an asset management company. Our primary goal initiative is to help advisors build better portfolios. That's really the simplistic. We are the investment engine that provides models, research, support, trading, back office execution, settlements to primarily independent RIAs. So I always say like there's sort of three verticals, and we have 2.5 billion in total assets. So the first vertical is manage ETF portfolios, which are risk-based, outcome-oriented. If you're looking for like 60/40, if you're looking for target yield, we deliver that in an ETF wrapper. Second vertical is we have our quant stock selection models, which is where we mine for the alpha and the beta. And we start, it's like a funnel. We start with a large universe of stocks, and then ultimately we drill down to 40 stocks per particular factor. Could be quality, could be dividends, could be growth. That's the second vertical. The final vertical, as you mentioned, we've got ETFs. So we have two equity ETFs. We have one fixed income and one alternative / real asset ETF. So those are the three verticals. About 1.8 billion in our managed ETF, about 200 million in our quantitative stock selection model, and about 400 million in our ETFs.
Yeah, I love that because you can meet basically the client where they're at in terms of preference, of approach, and of investment vehicle. When we look back, 2025 has been a very challenging year of ups and downs and markets that have defied expectations, to put it simply. What are some of the key trends that you have been focusing on this year, especially as we approach, the end of the calendar year?
Yeah. So you're right. We're very close to the end of the year. And, the first thing that's kind of top of mind for us is that, I read an article the other day that the bonds are having a good year. And the bond index, the ag index, is up 7%. And I think it's important to understand that, inflation is running north of 3% per the CPI, which is the government statistics. But real world inflation, like if you go to a grocery store, if you pay your health insurance, it's well north of, 7%. So basically, your purchasing power has been eroded, this year. We've been living in a structurally higher inflation world. So that's one thing. Second is, I still think we're in a bull market. There's a lot of concerns out there about passive. These 7 stocks in S&P make up, 40%. And then Nasdaq, it makes up, 55%. But these are amazing companies. They produce real tangible businesses and net income. So, talking to advisors about tilting away, which we think you should do, like not give up on your SPYs and Qs, but own other things. So our message is, tilt away from S&P, Mag 7, mix in international, own real assets, own mid cap stocks, financials, industrials, other sectors besides tech, just so you get like more of a complete portfolio. These are like a couple of the top of mind things, and just kind of helping advisors navigate, what is a tricky part of the cycle. The third year in the bull market doesn't typically produce the results that we're seeing. As like typically like bull markets, they draw a lot of investors, leverage goes up, valuations, expand. So yeah, like things aren't necessarily cheap if you're just buying SPYs and Qs. But once you start looking outside, those two ETFs, we do see a lot of opportunities in the U.S. So just navigating advisors has been really interesting for us this year.
Yeah, so in a couple of things, you were one of the early folks on the debasement trade. You guys were ahead of the curve on that conversation, and you've also highlighted recently just the uphill battle of your traditional 60/40. Not only because valuations are really elevated, and credit spreads remain historically tight. So when we think about a playbook, sounds like the key message is diversify, maybe tilt towards quality, like any other thread that we can pull on here for, own the Mag 7, but not just the Mag 7. How do you really also complement that income and those parts of the portfolio needs?
Yeah, I mean, you're sort of hitting it on the head. I mean, I think that the concept of the debasement trade, or this like skepticism that the dollar or any currency is going to maintain their purchasing power, is becoming real, right? So you've seen now a tremendous amount of assets go into Bitcoin since they were launched a couple years ago. We put out our first paper on Bitcoin when it was at $10,000. This was like in 2018, and it's 100,000 now. So sometimes, Cynthia, it's not like what you think, but if the whole market is sort of worried about the debasement trade and buying Bitcoin, buying gold, I mean, gold is up 50% year to date. So we do think that you need to kind of diversify your alternative assets. We do believe in owning, Bitcoin, gold, precious metal, natural resources, energy, industrials, inflation fighting strategies. We run an ETF ticker PPI, which is up, over 30% year to date. And shockingly, maybe you have to look at it for yourself because maybe you won't believe me, Cynthia, but PPI has actually outperformed SPYs and Qs since we launched it in December 2021. So again, the market is saying that there is concern, and we do need to own, these inflation fighting strategies, gold, Bitcoin. That's one thing. Second is when you own international stocks tend to be more skewed towards like industrials, kind of real asset sectors. So just from a diversification standpoint, given that like the Mag 7 is so dominant in SPYs and Qs, which is what most portfolios are anchored on, we think international solves like a very important, just diversification, right? Because the goal for any advisor is to get, their clients higher up in the efficient frontier. And we always say is like, it's about after tax, after inflation, risk adjusted returns. So some of what we're doing a lot this year is like just trying to like, you know, advisors' internal compass, like it's kind of bring them back to center. Like, okay, don't get too far. Like there will be volatility. The cycle will evolve and change. So those are a couple things I would say our outlook. We talked about in our piece that credit spreads are pretty tight. Valuations in the U.S. at the index level is 15, 20-year highs. So it's a tricky part of the cycle. The Fed wants to, the market wants the Fed to keep cutting. Inflation's pretty high. So it's very, very tricky. So I think diversification is paramount.
Yeah, and to that point, we cover internally here like the economic data, which, as you know, has been sparse because the government has been on a shutdown. But it just came out, consumer sentiment is like second lowest in history. So you are seeing the cracks, to your point, of that focus on, like this focus on big tech, on these big winners is looking more and more fragile as we move forward. But I wanted to ask you now about a little bit about Exchange, our event in March. We're so excited you're going to be there. But more importantly, we're excited that you're part of the Exchange Advisor Council. And I'm just curious, what encouraged you to get involved with that activity? Like, what value do you get from that? I mean, I know what value we get at Verify from having your expertise and your insight in there, but I'd like to hear your side.
Yeah, well, I mean, I've been fortunate to be coming to the exchange conference, for forever. It feels like. I mean, I've been involved in ETFs, since the early days, 1999, 2000. So I've been going to the event for 10 plus years. It is still the best ETF event out there. I'm always excited to be able to like network and meet with all the the different uh, people in the ecosystem, whether it's the liquidity providers, the exchanges, the ETF sponsors, and then of course, financial advisors, because I think they really benefit from having like everyone kind of come together at once and network and give them best ideas, best solutions. If you can spend 2-3 days, kind of off your desk as an advisor and learn about the new products, learn what's available, hear some of the best people speak. So I'm thrilled to be part of the advisor council. It's a blast.
Any last thought? Any topic we absolutely cannot miss in 2026 in your mind, in your crystal ball? What is going to be the big ETF topic of the year in 2026?
We still have a few months away, but I still think it'll be something that's, related to whether, Bitcoin, private equity, private credit. We're seeing a tremendous amount of interest. I mean, some of the big wirehouses are saying, your 60/40 should be 60/20/20. And I think everyone is very concerned about, Mag 7 dominance in SPYs and Qs. And it's like, okay, you got to get back to your true north and how do you diversify. It is a tricky part of the cycle. Valuations are high, credit spreads are pretty tight. This bull market has lasted a very long time. So the fact that, we'll have people speaking about Bitcoin, alternatives, privates, I think is, all the reasons to attend outside of just being in Las Vegas, which is really, really cool.
That's right. That's right. Let's prioritize what's really important here. Listen, thank you so much for the time today. Thank you for being a part of the Exchange Advisor Council. We really appreciate all the expertise you bring to the conversation and the insight and the participation, really. And I'm looking forward to seeing you in person in Vegas, March 15th through 18th. Thanks for the interview today. And folks, for more, check out etftrends.com. We'll see you all later. Bye.